Crypto tends to go down right now. The question though is, where is the potential bottom? In this video we're going to look at data most people aren't considering. We're going to look at reference prices, on-chain analytics, etc. Let's try to figure out where this is all headed. What we've got over here is the trading volume based on the Bitcoin price level. In other words, there was a lot of trading in the range between December 2024 and the end of February 2025. Especially in the last weeks, a lot of trading activity happened, and then we initiated our decline. And it seems like recently, since there wasn't a lot of trading action in the 70 to 90k range in November of last year, they were going through that trading range relatively quickly again because there's no real support. Now, why does this matter? It's very hard to measure the fair value of Bitcoin, right? Should it be $10,000 or $100,000 or 1 million? Nobody knows, but everybody has their reference price. So you've got your price at what point you bought Bitcoin or you bought your altcoin for, right? And the coming prices that come after that are always in relation to the entry price. If you're currently in the negatives, if you're down on Bitcoin, for example, but you do believe in Bitcoin long term, then you might simply just continue holding or potentially even buy more and then wait for the recovery. But if you're already in profit, you might consider selling some of that profit and maybe allocate this towards other asset classes or potentially even just consume those profits. And so looking at that reference price for the market in general does make a lot of sense. And when very few people have the 70 to 90k range as a reference price, it's unlikely that the current momentum turns around during such a drop. And it looks like most people intuitively understand this because we've seen a very weak accumulation during that price decline. Very few people bought this dip. Now, besides the reference price, right, your purchase price versus the current market price, it's also important to look at momentum, because let's say you are already in profit and you might take that profit. If week after week we continue to see higher prices in Bitcoin, you might still not sell. You might consider selling though when the price appreciation slows down. Now, an interesting measure for the current momentum is to look at the very short-term traders. How much are the very short-term traders currently in profit or in losses? If the short-term traders, the tourists, they are in losses, they might exit the market and this might start a bear market. That's how I interpret this chart here. So we've got the Bitcoin price since its rally from 16k to above 100k, and we've got two average cost bases here. The first one in orange is for the wallets between 1 week to 1 month. So those are pretty active. To get the full length video, feel free to simply subscribe over here. Then you get it recommended by the algorithm.